Today you're going to hear all the various tax reliefs and deductions. I'll also be showing you what I exactly do for my own case. I'll also show you all the tips on how you can cut down your own taxes and save money. So if this topic interests you, continue watching. Hi guys, welcome back. Let me introduce you to KRIS's new tax relief and deductions page. This is very informative, and when I was preparing this content, I totally reshaped it because I realized how powerful this can be. It can actually tailor to each and every situation. So let me do a quick demonstration. If you, for example, are a foreigner, next input gender, marital status, employment status, and children. So I'll start off with the simplest example because the number of reliefs are just 6. As you have seen from the title, there are total 17 tax reliefs. So I'll show you which category has the most. But with a slightly simple list, we can zoom in on some key parts. The first is actually on SRS relief. Now, SRS is Supplementary Retirement Scheme. If you're Singaporean or PR, it's 15,300. If you're a foreigner, it's 35,700. So for foreigners, actually it's a bit different. All you need to do is just to hold for 10 years. That's the holding period to avoid any penalties. For Singaporeans and PR, you must go to your statutory age, which is 62 or 63, depending on when you open your SRS account. If you open as of this year, it's at the age of 63. If you're in the older batch, like myself, you'll be under the age of 62. So for foreigners, just 10 years of holding period. And when you want to withdraw, this is a quick flow chart to understand what is the tax rate you'll be paying. It factors in the withdrawal amount. It factors in also whether there is income in the year of the SRS withdrawal. Tax residency status apply, and follow this diagram to find out on the tax rate that you would incur. If you want to find out more about SRS and SRS related investments, check out some tutorials I've done before. I'll leave links above and towards the end of this discussion. So let's go back to find out other reliefs, and up next is actually parent relief. This not only applies to Singaporeans but also to foreigners. And as you can see, the definition of it is as long as you are supporting your parent and he or she is 55 and above. Your dependent must not have an annual income of $4,000 in a year and must be living in Singapore permanently. So over here, the amount of relief depends on whether they stay with you. If they are a dependent staying in, it's $9,000. If not, it's $5,500. If there's disability, the total relief will increase to this scale, 14,000 if living in and 10,000 if not. So with that answered, let's move back to find out on other reliefs. Now this is automatic actually, and you would see the earned income relief goes by the age. If you're also under the age of 55, it's $1,000 automatically. From 55 to 59, it's 6,000, and for 60 and above, it's at 8,000. At this point, you may be thinking, wow, elderly working, they got so much tax relief. Actually, I have private clients who are above the age of 60 and they're high income. They don't actually contribute much to CPF because the CPF rate changes as we age, correct? So their tax bracket is very high and they pay a lot of taxes. This 8,000 relief comes in handy. In any case, earned income relief, you don't need to click anything, it's automatically given to you. Singaporeans or foreigners, both will get. Up next, life insurance relief. For life insurance relief, it's a common question I get also. Usually it's, hey Josh, which of my policies can qualify? For most Singaporeans, I would think that life insurance relief does not apply. Because if you're in employment, with CPF contributing more than $5,000, you would already be disqualified from this life insurance relief. On the other hand, if you are self-employed like myself and contribute your own MediSave and CPF, then you would also cross this 5,000 and be disqualified from this relief. So I'll guess situations where life insurance relief takes place is for self-employed lower income situations or foreigners in this particular instance. Because foreigners don't contribute to CPF, correct? So if this applies to you, let me explain a bit further. It's only term insurance policies. Accident insurance does not qualify, hospital insurance does not also, endowment plans, all these don't qualify. Let's move on next to another relief, which is cost fee relief. Personally for myself, I haven't claimed much in this space, but if you have gone for courses, this is something you need to read deeper on. Courses not eligible for relief include seminars and conferences for recreation, seminars and conferences for general knowledge, and poly and uni courses where it's not exercised in your normal field of employment. And also do note, if your employer or any organization or skills future credit is being used, then it cannot be claimed under this course fee relief. Check out also the list of things that can be claimed, which includes test fees and tuition fees. So with that, this rounds up some of the key reliefs that applies broadly for everybody, Singaporeans and foreigners alike. And let's change the equation a bit to find out and learn a bit deeper on other reliefs. Before I get there, help me smash the like button. I'm filming this late at night after work. I'm having a hectic week, but end of year is where you can really save on taxes, and that's why I like to deliver this tutorial to you and take the right steps before 31st December. And let's move on next to a different situation. Let's change this now to if you're Singaporean, what other new reliefs start to come out? The first one that pops up becomes NS Man Relief. Now this is actually if you have served national service. I have myself, and I've even completed my reservist. So I'm in this 1,500 relief category. If you are a key appointment holder, you'll follow accordingly. And if you have performed NS service, it will also adjust accordingly. So don't do anything, and let's move on to the next one, which is newly appearing CPF relief for employees. This one, when you file for CPF, it's also automatically filed to IRAS. And take note, it's the portion that you contribute yourself, not the employer side. So for CPF relief, you would realize that it will be capped out at 20,400 if you are under the employed category. If you haven't been capped out before, take note for this year, although the CPF relief cap remains at 37,740 for 1 year, there is still an increment in CPF monthly salary ceiling. Depending on your company's style of bonuses and your wage structure, don't be surprised also if your CPF relief change. Again, the cap for employed is at 20,400. For myself, I'm self-employed. So my category will be this CPF relief for self-employed, which is the full cap of 37,740. This over here is my own tax relief from previous year. You will see that I've pumped in 37,740 and I'm getting the full amount. Again, that's because I'm self-employed. Everything contributed in is voluntary. Let's move on next to other reliefs that popped up. This over here is CPF relief, and this applies for self-employed also. What possibly is applicable to all Singaporeans is the CPF cash top-up relief. Over here, tax relief is now expanded to not only include special account top-ups but MediSave top-ups. Special account is capped by FRS, full retirement sum. As of this year, is 205,800. In 2025, it's 213,000. Then for MediSave, it's capped at basic healthcare sum. As of this year, is 71,500. So if you have not been working for too many years, either of these pots may not be full and you can actually top up. My suggestion would be always to top up the MediSave account first. At least for insurance and stuff, you can still use that. Special account is really for retirement. You can't see it until at least 55. On the other hand, if you've been working for many years, very likely your special account is full already. So what you need to do is to take note of topping up to your own MediSave whenever it's below the basic healthcare sum. Having mentioned that, let me give you a glimpse of what I built for private clients when I do a full retirement planning. Over here, I've highlighted to this private client to make top-ups on January, September and December whenever there's an insurance deduction. These are periods whereby the MediSave account is below the basic healthcare sum, and any top-up can qualify for tax relief. There are many subtle tips to maximizing your finances, and as always, if you're looking for fee-based retirement planning work, reach me on a one-to-one basis and I can show you where you can do in terms of improvements, not only to personal finance base, but also to investments, also to long-term planning such as home and stuff. Everything in finance is tied at the hip, and my best work is to help you look at it holistically, especially if you have tough questions to answer. So again, look for my links below. And let's flow back to looking at the full explanation, which includes also topping up 8,000 to family members. Take note for this family member part, if they are under the age of 55, is to their special account under the full retirement sum. If they are above, is to their retirement account until the cap of full retirement sum also. Coming to here, if you have questions, let me know in the comment sections. I know we've gone through a lot of tax reliefs, there's a lot of information, and I'll try my best to help answer them. Smash a like again if you haven't done so already. With that, let's move back to look at more situations of tax relief, and let's tweak the equation to female, married. That is where more tax relief options come up. Some are unique only to working moms. And with that, we'll flash out the entire list of 17 tax reliefs. I need to zoom out a bit to show you the full scope and to pinpoint where we can get things rolling. First things first, for women, especially if you have a son in NS, you can even claim NS Man Parent Relief. You can also claim NS Man Wife Relief. I think this is 50% of husband's relief in terms of amount. And also for working mothers, there are a few things that I'm highlighting now. Foreign Domestic Worker Levy Relief if you have a helper, Grandparent Caregiver Relief, Qualifying Child Relief, and Working Mother Child Relief. Let's deep dive into these four. And the first thing is actually Working Mother Child Relief. The most powerful relief, in my opinion, under the old scheme, is based on percentage of mom's earned income. So for working moms with 3 kids, it's 15 plus 20 plus 25%. That's like 60% of the total earned income already. That's how many high income moms actually hit this 80,000 tax relief cap. Do know again, everything we mentioned so far for tax relief, optimized until 80,000 only. Everything above is forfeited. But there's something I want to highlight also. In this diagram, you will see that from budget 2023, Singaporean children born in 2024 onwards is not going by percentage, but by absolute amount. First child, 8,000 relief. Second child, 10,000. Third child, 12,000. Again, for children born in 2024 onwards. I've actually found a diagram that helps simplify whether it's qualifiable only to mummy or for both. So over here, working mother child relief, only for mum. Foreign worker domestic levy relief, only for working mum also. Grandparent caregiver relief, $3,000 if you're taking care of child, also only to mum. Then what's on the left of this diagram is actually child qualifying relief, QCR. This one can be either daddy or mummy. For many private clients I work with dual income, I usually would suggest working mother's child relief will already cap out mummy's side of the tax relief. All children for qualifying child relief be parked under father. That $4,000 is better tapped there. But also qualifying child relief has certain criteria. This is a case study. Mr. and Mrs. Koh has a son Andy and he's just completed NS, now in uni. As long as he's still studying full-time and not having income, they will be still having the qualifying child relief applicable to them. On the other hand, Mr. and Mrs. Tan's daughter Bernice, age 18 only, full-time student, but she's working part-time earning $5,000 and above. Maybe she's doing some internship. Then in this case, Mr. Tan will not qualify for qualifying child relief. So take note, as long as your child is earning $4,000 and above, does not apply already. But there's something new. Over here it's highlighted from next year onwards, they'll be raised to $8,000. Which is good news because many interns working 3 months, 6 months might cross 4,000 but may not cross 8,000. So this is something to take note, which I'll highlight again for next year when we do this discussion. For any changes for qualifying child relief, go to IRAS tax portal, log in with your SingPass, and under File Income Tax Relief, Deductions, Tax Relief and Rebates, add child over there. Well, as you can see, the amount of tax relief ideas are that many. Highlighting again, tax $80,000. And if you can't reach the 80,000, what are other options? This will next fall to tax deductions. Let's move a bit lower. Some things to highlight. Firstly, donations. If you've been a fan of the channel, I did share before, I've donated $10,000 to my uni NTU, and this is my final year. I've done 4 years already. So not bad, pat on the back for myself. I will very likely be continuing this pledge because I believe that donating not only helps a needy student, but also is proof to myself that I understand money, that I can feel sufficient. That's why to me it's a very powerful thing to do. Check for always where you like to donate. Any amount donated will be 2.5 times for tax relief, and deductions will be on top of the 80,000 tax relief cap. So let's move on to other deductions. This over here is deductions of rental expenses. If you have interest costs on your investment property that's rented out, you can claim over there. Any agent costs, wear and tear replacement, all can be claimed over there. Follow the guides, but mainly is to net off rental income. So rental income will actually bump out your total chargeable income. Then at the bottom right, deductions for employees. If this could apply to you, check it out because certain employment expenses can be tax deductible. The criteria is that you must be under your official duty, not reimbursed by employer. I think mostly employers will reimburse, so it doesn't apply. Or you're swiping the company card. These are some descriptions of allowable expenses. I'll leave you to read further, and I'll move on next to work from home expenses. This came out in recent years only. Mainly, it is to take care of bills that you are paying in addition to your normal bills. Then it's attributed to work from home expense, correct? So check out our criteria, and that will fulfill the deductions category. Everything that you do today must be within the 31st December timeframe. Then it's qualified for the entire work year. Hopefully I've produced this early enough for you. For myself, I can show you, I've done my CPF retirement sum topping up 8,000. I've also done 37,740 because I'm self-employed to my own CPF for tax relief. SRS, I've also pumped in already. Thank you for watching at the very end, and share this video with someone who should learn a thing or two about it. With that, I'll sign off from here and see you in some of my previous tutorials that relate to SRS and CPF top-ups. Check them out and smash the like button there too. Take care as always. Goodbye.